Good afternoon, traders. It is Friday, March 28th, 2014, and the U.S. stock market is closed. Hey, I can't remember a weekend that I have looked forward to so much than this weekend. I am just going to be really happy not to be thinking about markets. And if anybody out there wants to call me and talk about markets this weekend, don't. I don't want to talk about markets. I don't want to talk to you. I'm sorry, it's not personal. We got hammered again today, and it's just like unrelenting. It's like the market gods are going to test my resolve to stick with the system, and this is about as bad as I've ever seen it. But it happened again today. We have this pattern that I've been talking about, and the market goes up. It just explodes upside the first 15 minutes, and then it kind of stalls out there. It can stay up there for a while, but it gets us into a whole pile of stuff, and then it sells off. And that's exactly what happened today. And we got into a pile of stuff, and almost all that stuff turned negative, and so we're holding it over the weekend. We're holding negative over $15,000 over the weekend. And it's almost all bad, and you can't win that way. And the system definitely, statistically, it will not continue to do that, but it's doing it now, and it really hurts. The one trade we did close out was also negative in Lululemon Athletica. So we were negative $2,700 on Lulu, and carrying over $15,000 going into Monday. Terrible. Anyway, let's take a look at the charts. Okay, this is the Dow Jones Industrial Average, and this is going back to about the 10th of this month, this horrible month that we've had in March. And I kind of wanted to show you this. You can... I'm getting people calling me saying, Bob, why don't we short the market? Why don't we short the market? And, this is anything but a bear market. This doesn't make any sense to look at this and see a bear market. It's a sideways market, and it's a sideways market that is just killing us with one particular pattern. You look here, this is what happened today. Again, we get this big shot up here right at the beginning of the day, and then it hangs up there just long enough to get us into a bunch of stuff, and then it collapses from there. It doesn't really collapse. I mean, the Dow ended up closing up 58 points, but it was up well over 100 up here. Now, just keeping in mind that this is still very much a bull market, this red line that I've drawn here, this is Robert's red line of resistance. And you notice how this market has been above this several times. Even today it got above it, but it can't close above it. And that's very critical. We need this market to close above this red line. Once it gets above that red line, it's going to take off and take out all-time highs. We're not very far from those all-time highs now. And that does not make a bear market. And you can look down here and see how, we have higher, lower lows here. That also doesn't look like a bear market. So, this is a bull market. But, what a horrible bull market for us. Because we're just getting hit over and over again with this one pattern. And I think I made a joke. I don't know if it was yesterday or the day before. I said something about all you have to do to be a day trader, make money in this market, is have an IQ of 10 or higher. And all you need to do is sell the market to 30 minutes into the day, and then cover the shorts maybe an hour before the close. And you would have made a ton of money today doing that same thing. Somebody wrote on StockTwits that I was just a dumb day trader. I don't mind being called stupid day trader. I don't mind being called stupid, but don't call me a day trader. God almighty, please don't do that. I'll show you just the frustration level that we're having here. We got into BlackBerry today, and bought it again right at the beginning of the day with this big surge up, and then this thing just fell apart, and we still holding that. Way down here it closes, and we're holding over $6,000 negative in that. I mean, that's about as, I haven't seen one quite that bad in several days. So BlackBerry really stuck it to us. And then, you know, even the stuff, we only had one trade in, and that was in Lululemon Athletica, and you know, we had bought that yesterday. We got into that, and then today it opened up. It looked like maybe it might go. It comes down here, and look at this. We are stopped out at the low tick of the day down there. And had we not been stopped out at the low tick of the day, we would have actually made a profit on this trade. I mean, I'm just not used to having those kinds of statistical coincidences happen, but that's what's been happening. All I can say is I'm very much, you know, I study the markets, I study statistics, and these are really aberrant statistics that we're getting chewed up with, and they will turn around and the markets will give this money back. I know that. You know, the worst mistake isn't being a stupid day trader, it's quitting now, and I am not going to quit. I'll keep putting these videos up because I know I'm going to have my day. Anyway, that's my thoughts for today. This is Trader Bob. Thank God I'm signing off, and I will see you on Monday.